Yeah, hi, good morning mga katribu. It's Wednesday once more. Welcome to another enlightening episode of Straight Talk, where we delve into the pressing issues that shape our times. I'm Chito Lozada.
And I'm Teddy Montelibano. We're live on Daily Tribune's Facebook page and Tribune now on YouTube, bringing you in-depth discussions that matter.
So today we have a very special guest with us. Joining us is Angelo Taningco, Chief Economist at Security Bank. With his deep insights into the economic landscape, he'll help us navigate the complexities of our financial climate.
Welcome to the show, Mr.
Angelo.
We're excited to have you here today and look forward to your expert insights.
Thank you.
Okay, so
Yeah, we're hoping to get the insight of Jello regarding the elections.
Among other things.
There's two elections coming.
what 2025?
That's 2025, and next week it would be the U.S.
I'm on
elections.
tenterhooks.
Tenterhooks.
I'm on tenterhooks about this. It's a hotly contested U.S. elections. But before that, maybe let's just start. What do you do with Security Bank? As a chief economist at Security Bank, could you give us an idea about what your function is, what your role is, and basically your work?
So I do economic research work. I provide macroeconomic forecasts that I publish in our reports that we disseminate to clients. I also provide forecasts and views on certain financial assets, like in the case of bonds, interest rates, also exchange rate. And then I also manage a team of analysts in which we also do micro or sector company level research that would be related to equities.
Yes.
The stock market.
For such a busy person, thank you for giving us just an hour. It's going to run for about 45 minutes, effectively.
My pleasure.
Your time. Yeah. Okay.
So back to our question. What do you think are the prospects of the economy regarding after the elections in the U.S. next week?
How would the elections impact the Philippine economy?
Well, currently the global market participants, like investors, traders, they are awaiting for the election results in the U.S. And of course, they are gauging what would be the implications of the proposed economic policies by the candidates on their respective investments and businesses. And even, of course, government leaders as well are looking at this situation closely. So I think that, well, as we have already heard from the two candidates about their economic policies, I think it would be safe to say that in terms of, say, a Trump presidency, we think that this will benefit more U.S. corporates because of the deeper tax cuts that he's espousing. At the same time, there's also, say, trade policies that will be imposed in terms of tariffs in order to, I think, reshore U.S. businesses abroad back into the homeland, U.S. economy, and in order to promote jobs. The U.S. economy currently is resilient. The latest numbers that we see show that the GDP growth is hovering around 3%. In fact, the third quarter U.S. GDP growth will be released by tomorrow, and it's anticipated that it's going to be 3%, somewhat similar to the second quarter. And that's good. And part of that is because the labor market in the U.S. has been resilient as well. Latest numbers show job jobs created have been more than what was anticipated. Also, inflation is on a decline in the US, but it's still above the 2% target. So there's still works to be done by their central bank in trying to meet that target. So at the same time, the US, in terms of the central bank, has been conducting monetary policy in such a way that they are going to navigate towards a soft landing, meaning to say growth will still be positive, albeit not as strong as in the previous, but it's not going to go into a hard landing or a recession.
A recession,
Yeah, because in the past 2 years, we've seen interest rates climb, both in the US and in many other economies around the world, including the Philippines, because they would like to curb inflation, which heated up back then. But now, it's going back towards the target range. So they're calibrating that rate cuts, and then amid resilient growth. And that's why, because of this positive sentiment on the US, consumer confidence in the US has improved further. That's one of the reasons why the US dollar has been strengthening. So there's now more confidence on the US dollar, on the US economy, and more importantly, if we have a change in the guard, so to speak, given this election, that will likewise provide more clarity on the economic policies of the US moving forward. But we think next year, US economy will still be in a positive shape. Growth about 2%. Is what we are expecting for US GDP next year.
Doesn't matter who wins.
whether Harris or Trump.
Yes, the market is expecting similar growth, either Harris or under
Really?
a Trump presidency. In terms of inflation, the same, similar inflation for US, whether it's Harris or it's Trump. I think what differs would be in terms of the fiscal sector, particularly the deficit and the debt. Because in a Trump presidency, the tax cuts will be deeper.
Yeah.
So that's less revenue. Also, there will be more tariffs. Kind of going to compensate for the revenue loss from the deeper tax cut.
Tax cuts. Yeah.
And hopefully, the tax cut will invigorate more businesses to spend. That will generate revenues and earnings, and that will widen the tax base. But still, the market is looking at wider deficit for the US if Trump wins, and a bigger debt. So that's why bond yields in the US have been rising. In fact, this month of October, if we look at the US Treasury 10-year yield, it has climbed sharply by 60 basis points from mid-September. And this was just after the Fed cut their policy rate by 50 basis points, which is more than what was expected of 25. So it sounds counterintuitive at first that the Fed cut more than expected. Still, bond yields went up, which was not that widely anticipated. And that's because of the outlook on the fiscal side, especially if Trump wins. In fact, the market is betting now more of a Trump presidency compared to a Harris.
See.
Why is it so?
Well, I think it has something to do with the recent developments in terms of how they share their economic platforms. Also, I think maybe there's now more clamor for some form of change in U.S. economic landscape. Even though it's resilient, I think there's still a need to, say, suppress inflation further, to create more jobs and on a broader scale, and also to ensure that the stock market, for example, will continue to accumulate more wealth, because since the start of the year, it has gone up by 20%. And that was amid high interest rates. Now interest rates are going down, so it should be that stock prices will have to move up further. And the dollar, of course, will continue to be resilient.
That have a bad implication on us, since the foreign funds will be drawn back to the US.
The
with the
expectation,
improving rates and those things.
yeah, given the expectation of a stronger dollar, other currencies in the emerging markets, like in the Philippines, will ease. So that's what we have been seeing since the start of this month of October. The dollar peso, after hitting about 55, 50 September, it's now back above 58.
58.
Yeah.
Yeah.
And that's a huge turnaround. I mean, because since in the third quarter, the dollar peso fell by that magnitude from 58.60 end of the second quarter, it fell to 56 end of September, and now the peso has depreciated together with most other currencies because of the stronger dollar.
So you're expecting this trend to continue, the weakening of
Is there a
the
possibility that it will breach 60 pesos?
60?
Well, our view is unlikely that it will move up further towards, say, 60. In fact, we still anticipate the last 2 months of this year, after we see the election in the U.S., to have this historical performance of the peso strengthening because you'll have more remittance inflows, more tourist arrivals, more businesses for the business process outsourcing, usually at the latter part of the year. So that will bode well for the Philippine peso.
Yeah.
So we think that the dollar peso will consolidate, will correct, because it has, I think, overshot this month of October, given that change in expectation to benefit more the potential Trump.
I mean, it's a little bit dreary if you're looking at it getting any further, getting any higher, especially with the holidays. You know,
Yeah.
I would imagine prices would be going up
Yeah,
for both commodities and all that.
Right.
Yeah, but the weaker peso would encourage more OFWs to remit their
Get
money.
to remit
Yeah.
more.
Yes. So that's
And the
also
exporters.
an argument why there will be more inflows in the latter part of the year because the peso has already weakened now. So in terms of the timing of it, then maybe really a need for
And also trade,
correction.
isn't it? A
Well-
weaker peso would mean more cheaper Philippine goods being sold abroad.
Yes. So
For exports, yeah.
better
For
for
exports.
exporters.
Well, unless Trump decides to impose a higher tariff on, he's well, I guess I think that policy of his,
should be
well,
imposed on
that
us.
potential, that projected policy of his only refers to Chinese goods
No.
going inside everything.
Well, that also includes European
European.
goods.
Everything, huh?
So
All goods.
Yeah, so even the EU is now looking at the list of those goods that will be imposed tariffs, and of course they'll take action accordingly.
They can either withdraw or suffer. I mean,
Yeah.
bear the cost in the hope of doing volumes. I don't know. It's just a big it's a miasma for me to
Miasma.
imagine. With Harris, there's some sort of continuity.
Yeah.
Right.
Because it's a good thing for her and a bad thing for her. People are expecting that she's going to continue Biden, the policies of Biden, which is not for a country that is now clamoring for change, especially among the youth.
Yeah.
So if you see, there's a big trend of the youth towards Trump, surprisingly.
Yeah.
Even in Ivy colleges like Harvard, the young Republican Harvard clubs are they're looking record registration application from
the young Americans.
yeah, I don't know why. I don't know why. Maybe also because of the Middle East tension. No? A lot of sentiments for Gaza, a lot of sentiments for the Palestinian among American youth. Yeah.
How about trade, Jello? What are the prospects? If Trump wins, there will be less inclination towards free trade.
There is that view of more restrictive trade activity because of the tariffs imposed. And of course, it's not just unilateral tariff that will likely occur. You'll have retaliation also from trading partners, China or European Union. And so the global trade activity might, of course, be dampened. And that's why that I think has also been cited as one of the risks to the global growth outlook by the IMF in their meeting just recently. So I think it's more important now that there be more trade cooperation and negotiations amongst countries.
Okay, with the Trump, let's say if the change is going to go towards Trump, no. Is there any anxiety about his about the money, the finance people that he will put in place?
But
Kasi
Jello,
parang
before
extreme,
you-
parang extreme. Well, maybe when we
When we come
we'll
back.
come back from commercial break.
So, Jello, before answering that, we're going on a commercial break.
Okay.
And this break is brought to you by Angkas, Beat the Traffic, Bayad Center, hashtag Bigger Better Younger Bayad, and you can buy it all. Meralco, ang liwanag ng bukas. SM, we've got it all for you. Smart, live more today. Union Bank, it starts with you.
Tune in to Daily Tribune's show aimed at addressing the needs and problems of our OFWs from different corners of the globe. Hear about their plights and success stories every Tuesday and Thursday, 3 p.m. only on Daily Tribune's Facebook page and Tribune Now on YouTube.
Straight Talk dives deep into pressing issues of leadership, politics, business, and more. Engage in insightful conversations with industry shakers, government leaders, and trailblazers every Wednesday at 10 a.m. only here on Daily Tribune's Facebook page and Tribune Now in YouTube.
So we're still here with the Straight Talk, and we're still discussing the prospects after the U.S. elections, as the elections will be held next week. So we're looking forward to it.
We're looking for we appreciate the sober analysis of Mr. Jello here.
Yeah, very, and also sobering.
What would be the what is there any what is the sentiment of people like you, in the economy over, or let's say a Harris change of Harris change in command, and along with the kind of people that she'll bring as contrast to him. She starts to be, I'm trying to be political here. I mean, sorry.
Difficult.
I mean,
Why?
Trump seems to subscribe to the extreme rightist orientation, in terms of his.
Yeah, later.
I would imagine that would be the same kind of people that you would put in place in the Federal Reserve, maybe. You put somebody like Damon there, Diamond. How do you pronounce his name?
Damon.
Here, the Morgan Guarantee.
Well,
So-
that's his choice.
What is there? What are your thoughts about that? I mean, what would be? Who do you think would would a Harris administration? How would that let's say impact our own economy here in the country?
Well, I think it will be business as usual in a Harris administration.
No market shift or something.
In terms of the material change in expectation, I think that not unlikely to it's unlikely to happen in a Harris.
Let's make continuity.
Maybe there's more continuity. In the case of Trump, although we have seen his leadership style before, so to some extent it should not be a big surprise. But also, investors are still going to position and recalibrate.
Regardless of who the administration is.
Yes, I mean, and that's why they are digesting more the proposed policies of the candidates, so that they'll be in a better position to still attain their objective of getting much needed top line and bottom line.
Do you think we would be attracting more foreign investors with the Trump administration, for instance, in place in the States? Would there be as much would the interest in would there be kind of interest with foreign investors, let's say U.S. investors in the country? Would you think they would have you know increased the interest, or
Well,
American or
I think over
there would be more
the
interest?
over the medium term, there would still be interest coming from U.S. Businesses into the Philippines because of the opportunities here, and like I mean, of course, in terms of our trade, let's say exports, a large chunk of that is still in electronics, and one of our export markets, a big export market, is the U.S. So it still makes sense from a business standpoint that they continue to invest. And also in the case of the power sector, there's also lots of opportunities locally.
it's true, yeah, power sector.
For instance, there was a tripartite summit in Washington, no? Sometime in the year. I'm not sure what month it was, but
That was just recent, I guess,
they're kind of recent. Washington, U.S.,
in Japan.
Philippines, and then one of the positive outcomes, more positive outcomes, there was the announcement that the intention to install the zone economic corridor, which would really be beneficial to us if that progresses, no?
Yes.
You think that would still be under a Trump administration push through? Because it's very much a Biden creation
Yeah.
or initiative.
Program.
Well, there's there's still not much clarity.
Clarity.
Yeah, on how the plans will pan out
Yes.
from a Trump administration on, say, ASEAN or in Philippines. Maybe premature to say whether that will
So it's like a
change.
wait and see.
Yeah, so people are still waiting for the results and
Of course, the other thing that
and work from there accordingly.
of course, the other thing that you have in mind is the EDCA. You know, all these EDCA bases. I mean, this is really much also again an initiative that was taken up during the Biden administration with Trump making threats that he would charge America should charge NATO for American protection and security. I guess he would be talking that the same would be true for the Philippines. Danger is that if he pulls out EDCA, I mean, boy, the impact, the vacuum in the West Philippine Sea, it's beautiful for China. He hates China,
Yeah,
but
with
then again, he
regards
also
to
hates
China.
China. So, but you never know. I mean, you never know. Yeah, but you cannot discuss the stock market.
Well, our view on the stock market is still positive. There's upside.
With all of this tremors.
Yeah, I mean, well, if we look at Philippine stock market, it's, I mean, overall it's relatively cheap.
It's doing better, no?
It's
better
recently it has been, it
Yeah.
has the
Performing
PSEI has, gone up above the
We're having a
7,000
good
handle.
run, I guess.
And at currently, say if you look at future earnings, the local benchmark has been trading below the historical average.
Yeah.
So there's still room for more upside. And we've seen in recent months, just the second half of the year, foreign investors now back in the Philippine stock market.
Oh, that's very encouraging.
And recent events, and based on our conversations with clients, we have been noticing that more interest now from foreign investors, and that just shows that there is really good investment opportunities for them here in the Philippines, and so for as long as this environment is sustained in terms of sentiment still positive. We have seen that from central bank surveys. Business sentiment has been improving, not just near term, but also for the next year or so. So that also bodes well for the stock market.
So, if regarding small investors, if you have any savings in your pocket, Would you think that this would be the best time to invest in the stock market?
The market.
Or
Well, it depends on the risk appetite of the investor, but generally, it would be best to stay invested because you still have opportunities in the stock market to get positive returns, and since it's relatively cheap, as you buy it at this price, and as the market and the economy grows, and say in a stronger fashion, then that will also help lift market sentiment, and your investments will also get the much needed return. So stay invested, I think, would still be the best advice for retail investors, but just be cautious and maybe be selective on what stocks to
Invest
put
in.
into your savings. Normally in conditions where there's say uncertainty still, like still waiting for the election results in the U.S., then of course maybe best to have it in high quality,
Yeah.
blue chip names that have a good history, and also maybe acceptable dividends. So these are some of the general rules that we think will bode well for retail investors.
Jared, do you have any projection for the economy this year and next?
Well, we saw first half of the year, the Philippine economy grew by 6%. And we think that will be sustained this second half of the year. In fact, our 2024 GDP growth forecast is 6%,
Flat.
flat. And as we know, that's the within the target range of government, the lower bound, 6%.
About next year.
For next year, we
With
have
all
it
the election spending and
with the midterm election spending, and with interest rates declining, and inflation manageable, then we think that will help boost investment spending, capital expenditures. That will also benefit consumer spend, and therefore that will help attract more investments to create more jobs. So we have it, the GDP growth forecast for next year also a notch above 6%. And I think that's in line also with the market consensus.
Is it possible for us to attain 8% GDP growth?
Well,
Next year.
So some analysts are saying that the only way by which the administration or the government can really effectively address the poverty levels, I mean to lower it is to up the growth by at least 8%. Is
Yeah.
it possible?
well,
You think?
yeah, I think it's possible, but in terms of the chances of it being hit, given this still uncertain environment, maybe less likely. But of course, if you have a swing in, say, confidence towards more positive territory, and if interest rates continue to decline, and if inflation remains controlled, and if everything else, the risks associated to, let's say, geopolitical tension, or if the election risk finally subsides, then I think the chances of it will increase.
8%.
What about Angelo? What about what about geopolitical tensions? What about the Ukraine? It's still going on, no? Russian assault of Ukraine is still going on, and also the possibility
East.
that the war in Iran might expand. Is it that? How does that figure out into your analysis?
Well, it's still part of our geopolitical risk monitoring, but in the case of the Russia-Ukraine war, we think that that has been already a bit contained. In the case
Contained in terms of what?
in terms of its effects on supply chains, trade, commodity prices. We've seen commodity prices now back to normal levels. Of course, we've seen gold at record highs, no? Prices of gold at record highs, and that's partly because it's a risk haven asset.
Yes.
So,
Yeah.
so it's similar to the U.S. dollar, which is also a risk haven currency. So that's why both have been reaping gains of late. And then, but in terms of our outlook on the Middle East,
Middle East.
just recently we saw the retaliation, right, of Israel and Iran, but the market perceived it as well targeted, well contained. So, so the expectation is okay. It seems that has ended our concern for the moment. So that's why the immediate reaction on oil prices is it immediately
Yeah.
fell
Immediately.
by more than 5%
Yeah.
just a few days ago. And so it's at relatively, I think the Brent now at about $71 per barrel. Before it used to be above 80. So that didn't spark any increase.
The economy seems to be impervious to all of this. But so is there it behaves, no? It behaves very, very uniquely. Can you say that the market can get used to these tremors,
Well,
and treat it as if it's just one of those? But I don't know how does it do? How does the market? How do markets behave? How does the economy take all of this variables?
well, markets adjust immediately based on news, based on new information, and of course they have initial expectations. But when say actual events would either occur within their expectations or say deviate from their expectations, then they will adjust accordingly. So we saw that in the case of the oil price, it fell sharply because the expectation that the retaliation would worsen, it did not, because the attack was just confined to military targets, not hitting oil or nuclear facilities. So it's the market thinks, okay, so that will not really lead to an oil shock. And then, of course, back to fundamentals, China demand for oil has been sluggish because the economy of China has been sluggish. So it now goes back to the supply-demand dynamics on oil. So the price that we are seeing right now reflects that. So relatively weak demand for oil. And then now OPEC will have to talk about whether to increase production of oil, say in the next 2 months. But given these prices are now relatively not high, then they might, think, okay, maybe now not a good time to increase production because that would further depress oil prices. So you have this, adjustments on plans and expectations of market thinking. So that's reflected in prices of assets and commodities, in financial assets, and so yeah, so it's I think pretty efficient in terms of what we're seeing globally on markets.
You're talking about 2 elections. What's the second election?
The second election is next year, so we'll discuss it after our commercial break.
As I said, the market.
And this break is brought to you by Angkas, Beat the Traffic, Bayad Center, hashtag Bigger Better Younger Bayad, and you can buy it all. Meralco, ang liwanag ng bukas. SM, we've got it all for you. Smart, live more today. Union Bank, it starts with you.
Tune in to Daily Tribune's show aimed at addressing the needs and problems of our OFWs from different corners of the globe. Hear about their plights and success stories every Tuesday and Thursday, 3 p.m. only on Daily Tribune's Facebook page and Tribune Now on YouTube.
Straight Talk dives deep into pressing issues of leadership, politics, business, and more. Engage in insightful conversations with industry shakers, government leaders, and trailblazers every Wednesday at 10 a.m. only here on Daily Tribune's Facebook page and Tribune Now on YouTube.
So maybe we can, Ted, we're back. We can talk about the other elections.
What other election? Yeah, God. Another funny animal is Philippine politics.
That would be the midterm elections of our
You have a president who's about.
country.
Sorry, I will keep my mouth shut because I have very strong sentiments about
better.
politics, and so you should take over this part of the conversation.
I'm aching to ask this question. there were some apprehensions about the sale of Bangko Central golds, and there were views that it is just prudent because of the price of gold right now. So how do you have any idea about or analysis about this?
Well, looking at the central bank's foreign reserves, latest data end September, it's at a record high, 112 billion
That's true, yes.
dollars, and partly because gold is in the reserves. I think it's about 10 or 11% of the total reserves, and gold prices have been rising this year, more than 30% up already since the start of the year. And the outlook on gold is still positive. I think right now the gold price is around $2,800 per ounce, and the outlook, some of the outlook is that by end of the year it could reach 3,000. So, I mean, of course, central banks will have to take that into account in their reserve management, and if they see opportunities for that in that kind of outlook, then they will of course take advantage. I mean, of course, if that would yield a better return, if you're gonna sell gold, some part of it, at a higher price, then that bodes well for the profits of central banks. So, to me, I think it's just a natural, way of managing reserves. And as I mentioned, it's a record high, 112 billion. So we think that's positive for boosting the external buffers of the country, which is already more than adequate. Because how do we measure adequacy of reserves? Well, one is the ability to meet import payments.
Yes.
So we call it import cover. And the threshold is around 3 months.
Okay.
And the latest import cover of our central bank is about 8 months. So it's more than double,
More than adequate.
more than adequate. Another
months.
measure is ability to meet short-term external debt obligations. And based on original maturity, it's around 6 times. I think based on residual, it's around close to 4 times. And the threshold, I think, is 1, so still more than enough.
Okay.
So for us, that's also one of the factors why we think the peso is not, susceptible to a so-called speculative attack, because the external buffers are there, are strong, are
Because of the
hefty.
what? I'm sorry. Because of
Hefty. The foreign reserves, it's
foreign
hefty.
the foreign reserves.
Hefty. So, so that's why if you look at the recent movement of the dollar peso, partly because the dollar is strong, that's why the peso is weakening alongside most other currencies, but it's not weakening sharply. Yeah. So there's always a certain cap that we observe, and then
There's no sudden swings.
no sharp swings there, and then it corrects itself, and then partly because of the fundamentals.
And that's good for our economy.
That's good for the economy, and we continue to have a positive outlook on the peso for next year. So we continue to think the peso will appreciate next year. Once we see already more clarity on the U.S. side in terms of what will be the other economic policies to be crafted by the new president.
Yeah.
We're being told to wrap up.
31, today's the 31st, right? Today's the 31st.
Today,
What's the date
29.
today?
Ah,
not
30th.
Are you kidding?
30th.
So, my goodness, that's just less than a week. Just less than a week from now.
You're talking about the election?
U.S. elections.
US
What other election are you talking about at this point in time? it has worldwide impact. I mean,
Of course.
yeah. And, well, even economists, I was reading economists is for Trump. Huh? They think, that's not for Trump, but they're thinking that they're leaning towards
Trump
Trump
administration. A new Trump administration. So, Jello, can we have your parting words since we're wrapping up?
Well, uh, our economic outlook is positive
It's good to hear.
for the global in terms of the U.S., also the Philippines, and we think that fundamentals will play a key role. We see growth to be resilient in the U.S. and also here in the Philippines, and that will be backed by, on the demand side, households still spending, still have enough savings because the labor market is still healthy. That's creating more jobs. We have relatively low unemployment rate, and we have, especially in the Philippines, a young and dynamic workforce. So labor force participation is active in the country, and most sectors continue to create jobs. And because that's also being due to more investments that we're seeing, not just from the local businesses, but also from the foreign side. We have seen, investment pledges increasing, and that turns into realized investments. Not immediate, but of course, there's over the near term and long term. As we continue to have this kind of trajectory, then the per capita income of the country will improve, poverty incidence will go down, and you'll have a more equal distribution of wealth, and that will hopefully lead us to a higher credit rating, and basically the fiscal and monetary policies that will be utilized over the medium term will continue to meet their objectives of ensuring pro-growth, creating jobs, and also ensuring price stability. And all of these things, I think, are key ingredients for a longer, more sustainable economic growth.
So,
Fantastic.
very promising indeed.
You made my morning. I woke up in a bad mood today. No, it's even out.
So,
Fantastic.
that wraps up our another insightful
Yes.
episode of Straight Talk. And thank you to our guest, Angelo Taningco, for sharing his expertise with us today.
Absolutely. We hope we all gained valuable perspectives that I had on the economic challenges we face and what they mean for our future. Thank you to our very sober and very articulate Chief Economist for Security Bank, Mr. Angelo Taningco.
So don't forget to join us next week for more discussions that matter. If you enjoyed today's episode, please like, share, and subscribe to our channel.
Until next time, stay informed and stay engaged. Okay, thank you. Good morning.
See you soon. See you next week.
This public service announcement is brought to you by Meralco.
Alam nyo ba kung saan napupunta ang binabayad nyo sa Meralco? Dito sa series na ito, isa-isahin natin yan para maipaliwanag ko po sa inyong lahat. Ako po si Josel Dariaga ng Meralco Corporate Communication Office. Alam nyo ba na pag nagbabayad kayo ng bill sa kuryente, nasa mga 20% lang on the average ang napupunta sa Meralco? Sa katotohanan, nahahati sa iba't ibang components ang inyong electricity bill. Kumbaga parang pizza lang yan. Kasama sa binabayaran natin ay ang generation charge na napupunta sa generation companies o mga nag-ooperate ng power plants, transmission charge na napupunta sa System Grid Operator ng Pilipinas, na National Grid Corporation of the Philippines, at iba-ibang charges na napupunta sa gobyerno. Tulad po ito ng mga subsidies, taxes, universal charges at fit-all. Kung tutuusin, tulad nga nabanggit ko, nasa around 20% on the average ang kabuang bill ang binabayad sa Meralco sa pamamagitan ng distribution charge. Ito na ang pinaka-epektibong sistema para sa electricity consumers. Iwas abala ito para hindi na isa-isahin pang bayaran ng iba't ibang kumpanya na dinadaanan ng kuryente. Naway, nabigyan linaw ko po kayo kahit papano sa inyong mga katanungan ukol sa inyong electricity bill. Hanggang sa muli, ako po si Manong Joe, ang inyong lingkod.